Hello, and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Before we get started, if you could take a second, slap a like on this video, subscribe to our YouTube channel. It really helps get this video out there into more people, more eyes. So if you could take a second, do that, we appreciate it. Now, let's get to it. So this past week, we saw the market down 0.13%, so relatively flat. We're still up year to date 11.28%. But really the biggest thing that happened this week, and that we're going to take the majority of this time to speak with you about, is the Biden tax plan. So looking at the market, as we see, we started off the week relatively flat on Monday, and then we took a deep dive on Tuesday, started to regain that. And then right here, this is the moment where Biden came out and said that he was thinking about eliminating the long-term capital gains rate for anyone making over $1 million. And so that happened right at this moment, and we saw it plunge, almost have a little bit of a bull trap, go up a little bit, and then plummet back down. Now, the interesting thing is that the next day on Friday, we actually regained almost all of those losses. And I think a big reason is because the market might have overreacted. So is it bad for the market to increase the long-term capital gains rates? Absolutely. I think it would have a drastic impact, especially considering that it would be going from 23.8%, including the Obamacare tax, all the way up to, in some states, over 50%. If you were in California, it would be around 54% on your investment taxes, which I think would have very horrible implications for the market. But I think the market realized on Friday it's probably just not going to happen. There are a lot of Democrats, senators who actually are backed by the financial industry, and I don't think that their constituents would allow this to happen. I don't think they would keep their seat if they voted this way. And so I think that's really going to hamstring that potential, especially with that 50-50 split in the Senate.
And the fact that the Senate Majority Leader is from New York, a state that has many financial interests at heart. And as Knight had mentioned, he is probably one of the senators who were backed by these financial interests.
But I think it does bring up an interesting question. And as we see, the market did rebound. But I think the deeper, more interesting question is this tax on the radar for the future? You know, it's probably not going to be gotten rid of completely, but the number 28% has been thrown out there, number 25%. And I think those are potential possibilities, and where the market might have overreacted in that it's not going to be that 50% or just completely gotten rid of long-term capital gains. But I don't think that 20% might be there forever for especially the wealthiest individuals or the highest earning individuals.
And that's a very good point. We've seen this before in various tax plans over the past decade since we've had a capital gains tax, where rates have gone up and then gone down, depending upon which administration and what people think are fair.
Yeah, one thing that's interesting, it's not always directly correlated, something that I was seeing a lot this week, in that when taxes go up, still the stock market usually seems to go up anyways. And it's not directly correlated that you raise taxes, stocks go down. And I thought that was interesting. Now, I personally do believe that if we got rid of the long-term capital gains rate, it would have an extremely adverse effect on the stock market. But if it was only raised, 3%, 5%, 8%, there might not be a very significant move, especially if it's just for a minority of the people who are investing.
Very good point. I also think what we need to be looking at is, and one of the reasons I think the market reacted the way it did, when tax increases are announced, they usually don't go into effect immediately. So it gives people a time to react to the news and to buy or sell prior to the enactment. And very often, if you're doubling a tax, people will sell prior to the date that that takes effect. And I think that's what we were seeing, some profit taking and some reaction to that. And as Knight said, it was a bit of an overreaction. And the very next day, after some more thoughts, it was decided, this probably isn't going to be this drastic, but something may happen.
Overall, I think we're okay for now. And if it does increase, it's likely not going to be retroactive in that it won't capture 2021. So people will still have a while, at least until the end of this year. And then it might get enacted in 2022. But it would be, again, really, really hard to get this sort of legislation through Congress right now. As always, we appreciate you guys tuning in this week. We always like to say, we're here to support you. Your money's here to support you. And we'll see you again next week.